on the U.S. side, currency-wise, what besides the policy actions to just make the sovereign stronger, but they also have an interesting rate policy, which is quite a different state as us. So how does that potentially interact with the currency pairing? And where do you see this currency pairing? Because this is a question that a lot of our clients, as you would assume, is a topical concern. And USD has been in the headlines for a long time. Is this currency going to weaken? Or because the administration, I guess, presume wants to weaken a little bit, but not obviously fully weaken. What is the path? What do you think? Are we going to be range bound, much like the last 10 years? Or is there some sort of shift happening? How would you approach this?
Like range bound, you mean in dollar CAD
dollar CAD specific term?
That pair.
Yeah, like we've been in a band, realistically speaking, for a long time.
So I'll just give the fixed income perspective, and then like Christian can round that out. But obviously, when we think about how bonds like see a currency pair, it's really about interest rate differentials, and in particular, real interest rate differentials. So we talked earlier about there's like the real rate and then the inflation break even. Realistically, when a central bank lowers, let's say, policy rates, they can't control like what's going to happen to inflation. Either inflation cooperates and will be at their target, or it will start to rise. And more often than not, historically, central banks were cutting interest rates because they were responding to weak economic growth. So inflation was probably already tanking because consumption was tanking, et cetera. But then what happens is longer-term inflation expectations start to rise because the outlook is like, better times ahead for the economy. What happens if over the next, call it 18 months, the Fed starts to lower rates but doesn't care about what inflation is doing, or is willing to accept a slightly higher inflation outcome, right? Either because the Fed becomes politicized or because they're discreetly accepting a slightly higher inflation target. Like it's not 2%, let's say it's 3%, but they don't make that official. That's possible. In that environment, assuming there's no change in what Bank of Canada is trying to accomplish and they're not changing their own metrics, in theory, that means U.S. real rates will fall more than they should because the Fed, especially shorter term real rates, because the Fed is artificially lowering interest rates.
Yeah.
And in that case, I expect the U.S. dollar to depreciate versus the CAD.
Okay. And what would be a case where the U.S. dollar remains strong? What would that scenario look like?
If the Fed no longer cuts interest rates,
and so effectively growth has to surprise significantly.
Yeah, I think a couple other things that could support U.S. dollar, just to play devil's advocate to your question, would be there's a lot of capital inflows into the U.S., right? Especially because U.S. equities are performing so strongly. There's a lot of a ton of capex into AI, a ton.
Yeah,
that's a big source of U.S. growth right now. So the capital inflows support the currency.
Companies are moving manufacturing, capital, everything back to the States or not, or
it's a mix.
They promise, but the question is, are they going to do it?
Okay.
Regardless, there's a lot of capital inflows into the U.S.
Yes.
The Fed may not cut as much as expected. That would be supportive. Growth in the U.S. is still quite strong, especially on a nowcasting basis. It's stronger than a lot of other countries. So, there's a case that U.S. dollar could continue to remain strong on that side. And it's possible that Canadian policy shift doesn't work. Maybe our growth is just structurally lower. Maybe we have such a productivity issue that we can't really catch up. And in that case, we probably do stay range bound. But our asset allocation view would be opposite. It would be that, at least for USD CAD, we think Canadian dollar can strengthen pretty materially over the next 5-10 years. And that would just be because we're at historically wide rate differentials now. Yeah. Canada can improve its growth picture. Those rate differentials should close. That would be supportive of the currency. Capital inflows should hopefully finally return to Canada. I think we've been FDI outflow for many, many years, and we're finally starting to see that pick up. I think that would definitely pick up if we did have these nation-building projects, if we had more fiscal policy, which we may see in November. So if Canada can get the self-help story right, I think it is positive for the currency.
But I would just add one other thing, and I was meaning to mention that when you were talking about immigration policy. I think one thing that I'm very aware of as we're in this sort of, we'll call it higher for longer, or more normal interest rate environment, and the expectation is that will continue. One thing that I'm very mindful of is that increase of expected higher interest rates has come against a backdrop where population growth, especially in 2022 and 2023, was abnormally high. Part of it was a reversal from the flat population growth in 2020 and 2021 because of the lockdowns, also
and
because
you couldn't get people. No one was traveling.
That's right. So there was a big reversal of that. How much of that are we kind of like missing the forest for the trees? That immigration policy actually made a huge difference in terms of policymakers and investors dialing up what we call the neutral rate, right? That expected long-term interest rate. And now that immigration policy has reversed course so much. Yeah. Now in the U.S., it's been well telegraphed, right? Like this is why, partially why the administration or Donald Trump has come back to power is because, you know, he advocated for much tighter borders. So that was expected and priced in. What probably wasn't priced in and still isn't, I think, for Canada is what population growth over the last year, correct me if I'm wrong, was 0. Does anybody think that that's the case with a Liberal government in power? And if
0
was 0, yes. So the reverse, the about face that has happened in Canada on immigration policy is actually super subtle and very discreet. Like nobody's talking about it, but it's been real here as well. So if we're now talking about maybe the neutral rate in the U.S. should be slightly lower because of zero immigration, maybe we need to start thinking similarly for Canada, and in which case that's not fully reflected, and that's where I would see maybe some opportunity, you know, ceteris paribus, like nothing else, all else being equal, that's where I could see some opportunity, for example, for CAD to depreciate versus USD, just because that hasn't been factored in.
But generally speaking, though, my takeaway would be just listening to you. We seem to have more levers in our hand to actually strengthen our own currency by our own actions over the next 5 to 10 years.
There's a lot of room for
There's a lot of room for
I would say.
self-improvement in some sense.
Agreed.
Yeah,
We're not that dependent on just the relative differentials.
I think there's one elephant in the room we have to address, though, is that this assumes that USMCA continues and somewhat similar to its current form.
And isn't that fairly ironclad till 2036? I mean, you can announce you want to get out, like
Not necessarily.
or like what's the specific?
So
what's the risk?
Any party to the agreement can give 6 months notice that they want to withdraw at any time. So anyone can step away. Right now we're in like a review period, which was scheduled for 2026. It's been opened early by the U.S. Trade Office now in 2025. Clearly, though, you know, when it comes to trade policy from the current U.S. administration, they want to get concessions from other countries, as we've seen with the deals that they've gotten with others. So for them to just rubber stamp it as is, I don't know. I think there's going to be a little bit of negotiation back and forth. The assumption would be that it does hold. The assumption would be that it's beneficial to all three countries to have relatively free trade and, fortress North America environment. But a lot of the trade moves that we've seen year to date, especially against Canada and Mexico, are not what people would have expected and not super beneficial to any of the countries involved. So I don't think we can necessarily say things will be fine, guaranteed. I think it's more likely than not, but there's definitely going to be, there's a much higher tail risk now than there would have been a year ago that things don't go well.
The other thing I would just add to that, and it's not something that anybody talks about, but like Trump has very clearly demonstrated a preference for like bilateral relationship rather than multilateral relationship.
Everybody in a room together, rather it's one-to-one now.
It's one-to-one. And obviously he has a lot more leverage in that, or the U.S. maintains, not just him, like the U.S. maintains a lot more leverage in that type of environment. So it's also possible, and it's not something that has, been discussed at all, but it's also possible that maybe there's a U.S.-Canada relationship and then or agreement and then a U.S.-Mexico agreement. We have to be open to that possibility. But I would say, and this is highly anecdotal, okay, and this like kind of classic, we'll call it political theory, right? Like the median voter, like what is it that they want? Trump for sure plays to his base. I've spent quite a bit of time in Texas, believe it or not, like over the last year. I've spoken to a lot of different people, and it's very interesting that there isn't support for tariffs and like business-related disruptions, despite the fact that they support him on pretty much every other policy, social, economic, or otherwise. And I find that very interesting, and in particular towards Canada, which was a surprise because many people that I spoke to did not know I was Canadian at first. And I think that's really interesting to note because it is possible that could explain why he's really downplayed his negotiations with Canada after like coming out guns blazing against Canada even before Mexico. I think it's interesting how
we
it's
haven't heard much in the news, right? Actually,
no, we haven't heard much in the news for many months. Back in July, he even clarified what a lot of people started noticing, which was Canada's not a priority for me. He was being very quiet and subtle about it, and it could be because his own base and his own supporters weren't, this is again me totally speculating, but weren't keen on that. And another thing that I would add to it is, and this is where like we do need some serious self-help here, because Canada basically ended up getting a bit of a free pass with tariffs by him not tearing up USMCA and saying anything that is compliant with the USMCA in any trade will not be tariffed. We actually have the lowest effective tariff rate.
Yeah, correct.
Like sub 5%, whatever.
Barely 5 to 10% actually is not part of that agreement, right? Ultimately.
Correct. There was a lot of trade going across borders that was supposed to, like, that was expected to be USMCA compliant, but the paperwork had never been done. All the provinces helped their businesses, clean that up very, very quickly post-Liberation Day. So now the vast majority of our trade, like 90+%, is USMCA compliant, like rubber stamped. Even if again that USMCA agreement is like shredded up next year, I fully expect that there will be some agreement between US and Canada, only because it doesn't seem to me anecdotally like there's a ton of support for that.
Rationally, like a lot of the data bears that out too. Like the biggest trade partner for many of the vast majority of the U.S. states, but particularly the northern ones, is Canada.
It's the same for our provinces too, right? It's vice versa in that sense.
And they get a lot of very cheap materials from Canada because of this bilateral trade. And so it is, rationally, it should be fine, but...
And
rational.
Yeah.
Not everything
there
is rational
seems to be
these
some
days.
element of rationality coming through right now. So
yes,
this has been to put a bow on this conversation. This has been fun. The word for the year, I don't know if Oxford comes up 2 years later or next year when they summarize. I put tariff as a candidate to some degree.
Yeah.
For the simple reason. You said something earlier which I caught on is a lot of economic theory was predicting doomsday.
Yeah.
Now, no, tariffs could still have effects, but the doomsday scenario seems to be out of the picture.
Mm-hmm.
And let's say so far inflation numbers have been benign. Let's say another 6 to 12 months goes, and if inflation numbers stay relatively benign with some volatility, would we look at economic theory a little different, where leverage needs to be factored into tariffs and not just tariffs universally bad?
I think the difference, though, is when people were expecting doom, we're seeing much higher rates that would completely disincentivize trade and completely gum up supply chains. And then they were brought down to much more reasonable levels. So at 10% rates, it's a tax. So it's going to be a drag on growth, but it's not catastrophic. There's some supply chain impact, but it's not completely impeding trade. So it's just another wrench like we throw into the macro equation. I think it's another tool like a tax. But if you had trade embargoes, it would be a huge issue.
So this is effectively, to your point then, the U.S. just understanding it had X% leverage it could extract from its partners?
I would say yes, but I would elaborate a little bit more on what Christian was saying. And there's this like theory within, you want to call it economics or finance or behavioral finance. And that is like the difference between uncertainty and risk or volatility. One can be measured, and the other one, you understand, it requires some premium, but you can't really measure it. With the speed with which changes around tariffs, around policy, around everything has come out of the U.S. administration, I would just say it's really hard to correctly price volatility and its impact, whether that's on inflation, on growth, on anything. And it's more that the uncertainty has really materially increased or taken center stage.
Is uncertainty the key thing that the administration was playing on? Basically, that was their trump card to some degree, pun intended.
Well, yes. Well, isn't that his like MO with a lot of things, right?
And that uncertainty allows that gray area where you can extract concessions.
And you could see how he's doing that with domestic politics as well,
Right?
right?
Yes. It's with the shutdowns and whatnot.
Shutdowns, with like how he's trying to deal with crime in like various
Will he,
cities.
won't he?
That's right. But at the end of the day, everything I think still comes back to how much support is there, particularly in his base, but even the broader population for what he's doing. And believe it or not, where he's really pushing the envelope, like where it's not just, like coming out guns blazing with tariffs and then dialing it back way back, but like continuing to push, it's because he gets a ton of support for what he's doing, as unconventional or as uncertain as it all is. So he feels he can continue to push the envelope there, but that is absolutely his style. Like, come out guns blazing and then see the reaction, and if you're not getting support, you dial it way back.
I guess the midterms will be a pretty
telling.
Like this, like usually people sleep through midterms, but I think the world will be watching this time around.
What midterm cycle have you been?
No, but at least it's not or at least voters don't show up. Let me put it that way.
Oh, okay.
Usually voters don't. It's not like the presidential cycle, but I think this time around it'll be a massive referendum, because it's almost like either it'll be a rebuke or a vindication, and either way, there will be some sort of certainty going forward.
Usually what you see in the midterms is the party that's not in the White House tends to massively outperform, but that actually wasn't the case the last midterm election we had during the Biden administration. So it'll be interesting to see if the historical patterns are changing. I would say, though, that because so much is done through the executive in this administration, but that's been an increasing trend over multiple administrations.
Oh, yeah.
I don't think that the midterm election is going to have as much of an impact as we expect, because the One Big Beautiful Bill was already passed through Congress. So they don't necessarily have another bill that they want to pass that's super meaningful. Yeah. So I don't know if the outcome of the midterm is going to be super instructive to markets beyond just giving us a sense of what the next presidential election might look like.
Yeah, that's a good point.
So I guess it's a good read-through on whether the Americans prefer the Republican administration or would they come back the other way.
But a lot can happen in 2 years, and even more can happen in 3 years, and a lot has happened in less than 1 year. So we'll see.
A lot can happen between now and Friday. But thankfully, I would say the tweets have receded, at least maybe.
Actually, I'd rather stuff be there. I'd rather know what is being thought and said than radio silence. That worries me.
This has been a fun conversation. Just to wrap it up, your baseline outlook for the rest of the year. What should investors look forward to? And what are you thinking about optimistically, and what are some risks you may be looking at?
I think the most important thing is labor. So does the job market stay in its kind of okay, not so much hirings, not so much firings, kind of lukewarm environment, or does it get much worse, or does it get better? I think that trajectory will tell us a lot about monetary policy, will tell us a lot about growth. I think that's the most important thing to watch for. And then on the positive side, I mean, we continue to see decent tailwinds for growth beyond the labor picture. I think the biggest thing to watch for this cycle is if the AI CapEx spending slows down.
Yeah.
It's been a huge
that seems to be a
supporter
train
of
that
growth,
doesn't seem to be slowing.
a huge supporter of many companies in S&P 500.
Even
but
GDP growth, right? Ultimately.
It is. It's a big driver. So that's one to watch for. So I think earnings season now becomes like almost a macroeconomic release. You got to really pay attention to
right?
that.
Yeah. Actually, the big tech earnings is like, where's the spending going? Yeah. Alex, yes.
So I agree on labor. Like, that's the key one to watch. I mean, like, really for the last 2 years since inflation, COVID inflation was kind of tamed by central banks. It's been all about labor. The one thing I would say, though, specifically during earnings season, is that, a lot of the mainstream discussion around the corporate sector happens with, like, not just the Mag 7 and all the big names, but a lot of the blue chip names. And they've managed their balance sheets really well, and they've been able to either eat some of the tariff-related, inflation pressures or price pressures, or pass some of that on to either customers or other businesses that they work with. That's less so the case, for example, in the more like levered space, like when we look at some of the high yield companies, and definitely the ones that are not part of capital markets, which are like small and medium sized businesses. So when I think about earnings season, or when I think about business results, corporate results, I'm actually looking a lot at the things that are not sort of mainstream. And we know that those are either weaker operators, or even if they're not weaker operators, they're generally operating with much lower margins, maybe not as consistent cash flow generators. And therefore, how much of the tariff-related, price pressures they can either continue to pass on to clients or absorb themselves will really make or break where the opportunities are going to be within credit in particular, but broader bond market for the remainder of the year.
Fun. Fair points. And yeah, so if I had to sum it up, lots of green shoots in Canada.
Yes.
Lots of
Hopefully.
Yeah, hopefully.
I heard the hopefully. Yeah.
Well, I'm an optimistic
I'm
guy.
optimistic as well.
Yeah,
Me too.
I'm an optimistic guy.
Listen, if ChatGPT says that Canada is the place to be over the next decade, who are we to disagree? Okay.
Right? Yeah. ChatGPT. My niece asked it pick my clothes. So I think at some point, yeah, we might just outsource the brain. It's getting there. But yes, great conversation, Alex. I'm not going to call it Alexandra.
Yeah. Thank you.
Great conversation, Christian. Thank
you
you so much for joining Breadth of Experience, and looking forward to the next time as well. Yeah, thank you.
Likewise.
Thank you.
Thanks, Jose.